the rand seeing incredible weakness coming through. We've seen it managing to, track back and bounce off two-year lows that were touched yesterday at 8.33. But what have you made of the kind of movement that's come through where the pullback has been hard and fast?
Indeed, yesterday we saw the FOMC statement about providing further monetary support to the US economy, and that really just provided some kind of negative sentiment to the market, really spooked the currency and market analysts and players in the market. We saw the rand, as you mentioned, really weaken considerably on the back of those comments to those near two-year record lows. We expect the rand weakness to continue persisting, but it's expected to continue to take direction from global sentiment, which we have seen. Despite that, we do believe that the MPC statement later this afternoon will have some kind of bearing on the currency later today, but we do expect that pullback to be contained somewhat on the back of the fact that the statement out of the MPC is likely to be fairly dovish, and that could potentially indicate some reversal of the outflows that we've been seeing from the currency. So a fairly volatile market at this point.
Certainly when it comes to the South African Reserve Bank, what this weaker rand has done is create a monetary policy headache for the SARB as it tries to make this trade-off between rising inflation and declining growth. So moving forward, maybe a rate cut not so much on the cards anymore.
Indeed, last week we did see that the FRA markets were pricing in a rate cut of about 80%. That has fallen considerably and is more or less in line with Standard Bank's view of what we're seeing. Our base case scenario is for no rate cut at this meeting and next meeting as well. In fact, we're only seeing a change in monetary policy sometime in 2012 with a rise in interest rates rather than a cut in the third quarter of next year.
Because what's interesting, Shireen, is if you're looking at the rand against the crosses as well, against the euro, against the sterling, it's at its weakest level since January 2010. So, this is more than just a dollar strength story that we're filtering through. And I guess that's important to reiterate.
Indeed, it's not a dollar strength story. It's more about the rand taking direction from global sentiment and the fact that the US economy, the announcement from the Fed is likely to be short-lived. I believe that the implications is likely to be have short-term effects rather than longer-term effects. I think we still need to see more stimulus come through, and the Fed has indicated that they will. There are tools at their disposal that they will use to inject some kind of stimulus. But we're also seeing the weakness in the eurozone, which is not really coming to the fore. We're not really seeing any resolution from officials, the EU policymakers and the IMF as well. There's still trepidation in the eurozone economies, which could obviously continue to keep risk aversion quite very much alive.
Just how closely are you watching that meeting of emerging economies today, where on the table and up for discussion is the Brazilians' proposal to buy European bonds?
Indeed, that is really being watched very closely, but as the previous speaker noted, that South Africa is not really in as a favorable position as what the other BRIC economies are to provide that kind of support. China is likely more to, China, Brazil and India, for instance, are more likely to provide further support for the Eurozone economies. However, the problem's not likely to go away within just one fell swoop. I think it's going to be a longer term issue, and whether they come out with a solution of buying those Eurozone bonds, it's not likely to basically drive the Eurozone economy out of the recession, and they're really trying to prevent the Eurozone debt crisis from morphing into a liquidity crisis. So there is quite a bit of concern, and it's really going to be watched very closely.